This is the Ag Queen Podcast. This podcast explores the agriculture industry with the movers and shakers of those shaping it. Here's your host, Lori Boyer.
My guest on the show here today is Keaton Dugan. He is a senior manager with Pinion Global. Today we'll be talking about agricultural and farm taxes here, as we're not too far away from tax season. But let's learn a little bit more about who you are and your background first off today, Keaton.
Sure. So I grew up West Wichita and on a fairly small farm. I grew up kind of in the equipment industry more than anything. My parents had a John Deere store, went to college for an accounting degree, went to Kansas State University, Pratt alumni, got my master's there, went on, got my CPA, and I found myself, well, what at the time was Kennedy and Co. And is now since become Pinion. We've rebranded in the last couple of years. Here at Pinion, I am a senior manager. My internal role, though, is I oversee all of our commodity crop services. So that's everything from tax, audit, land advisory, farm program services, risk management, sustainability. So that's kind of an overall look and help have some leadership towards those services that we offer. Now, my bread and butter, my day-to-day is commodity crop farmers in the world of tax. So coming up here on tax planning, this is I would say probably my busiest time of the year because tax planning is one of those things, very, very important. You can't extend tax planning. And here we are, we've got a couple of months left of the year. And no, I'm excited to see how we can help farmers.
If I understand you right, Pinion Global then is a financial management company?
Yes. So Pinion, I would say Pinion is more of an ag consulting firm. So everywhere on the food chain, from the farmers in the field to distribution, crop inputs, grain storage, supporting those farmers when it comes to estate planning, maybe food distribution, biofuels, equipment dealers, anything along that food chain. We typically have a hand in when it comes to the ag consulting side.
All right, Keaton. Well, our conversation here today, let's talk about tax planning. I mean, that's really important to be thinking about more than ever, given the current environment that we're in the agriculture industry. And I know that's where your expertise lies as well. Where should we start with this conversation, Keaton?
When it comes to tax planning, I think to myself, where do you want your farm to be in the next 5 to 10 years? I think it's all too common to think to yourself, okay, I want to minimize my tax, right? And that's great. I want to minimize your tax too. But is that always the right answer to have zero tax every single year? And I would argue that in most cases, the answer is absolutely not. We need to be thinking more long term here. So when I come into tax planning discussions, especially with brand new clients, I'm trying to understand not only where they are this year, maybe what they've deferred in the past, what they've prepaid in the past, to understand kind of what hill we have to climb, but also what are the future needs of the farm? What kind of equipment are you looking at in the future? Are you looking to grow? It gets complicated. There's almost always outside sources of income as well outside of the farm. We work with clients all the time that are pretty well diversified. And so it's an understanding not only of where they are this year, but where they need to be in the future. And so that's where I like to start the tax planning conversation. And so when I think to myself, okay, what if you're a fairly high earner, right? You've got great outside sources of income. Your farm is hopefully doing it pretty well, right? Then let's talk about sticking into the low tax brackets. And here's why. We're paying at least a little bit of tax. We are still utilizing the standard deduction every single year. And for married filing jointly, in 2025, that's $31,500. That is not something that carries forward year over year. That is a deduction that you can take only in the year that you file. So if you're not using that standard deduction, you're leaving extra money on the table. So that's where I would say I would start the conversation. The next piece I would get into is, okay, Lori, I'm going to take us straight through the Schedule F here. For farmers. Let's look at grain sales. I would say the best lever that farmers have in their tool belt when it comes to tax planning is the grain that you're selling, right? So not the grain that you've already sold. It's the grain that in the last 2 months of the year where we're at here, the last 2 months of the year that you haven't sold yet, but you plan on contracting. So if you contract that grain, but don't take the cash until January 1st of 2026, you don't have to recognize that as income. However, you can give those deferred, what we call deferred grain contracts, to your CPA, and they can use those contracts to either pull income into the current year to help hit that targeted income tax bracket that we just discussed, or to help defer it. So by picking and choosing different pieces of those deferred grain contracts, maybe different sizes, if you will, like a $5,000 contract or a $50,000 contract, you're giving a lot of flexibility to your CPA to change and move the needle on your taxable income very easily. I'd say that the next big piece when it comes to farm income would be the crop insurance, right? So understanding how much of that can be deferred, and crop insurance in most cases is deferrable, right? So it can't be revenue protection. Revenue protection is not deferrable. So anything multi-peril damage related is in fact deferrable. Now it does need to be related to your 2024 crop. So any checks that you've received in 2024 related to your 23 crop, I'm sorry, those pieces aren't deferrable. So you got to pick and choose which pieces of that you can defer. Now, when it comes to crop insurance, though, it's not as flexible as the deferred grain contracts that we just discussed. You cannot defer them by check. That is more of an all or nothing activity, where if you're going to defer crop insurance, you need to defer all of your crop insurance. You cannot pick and choose which checks. I would say that that's the next biggest piece in the tool belt for farm income. I'm going to move on to the expense side of things. So depreciation, very hot topic the last several months, even the last couple of years. When it comes to depreciation, things just changed with the big, beautiful tax bill, right? We were going to be sitting at, I think it was 40% for 2025 here. That was your available depreciation on new assets purchased in 2025. With the new tax bill, any assets after January 19th of 2025, purchased after January 19th, are in fact eligible for bonus depreciation back to 100%. Now that's going to be for the next several years now. So bonus depreciation is a big factor. It's back in play. I think that if you're purchasing new assets this year, next year, this is absolutely a quick and easy way to go ahead and lower your tax bill. I say quick and easy. Yes, it's the quick and easy. Is it always the smartest thing? Know the needs of your farm. Don't be afraid to pay a little bit of tax in 1 year and avoid, pushing off equipment that maybe you don't necessarily need to purchase this year. The next piece I would move on to is crop inputs. Crop inputs, it's not hard to spend a lot of money on crop inputs to bring down your tax bill right now. I think that we've all seen that. Things are getting very expensive. I see a lot of producers in a cycle where they've been prepaying every single year. If you don't need to prepay this year, I'd recommend holding off what you can, unless if it's a smart financial decision for you. There's a lot of farmers out there that are receiving discounts, right, for prepaying seed, fertilizer. Absolutely understand the needs of your farm and do that. One caveat there when it comes to doing your taxes, there is a 50% limitation on this. This doesn't get talked about a lot. You can only prepay your farm expenses up to 50% of what your farm needed for that current year. So there is a limitation to how much you can prepay. And I think that that's just an understanding that needs to be on the table. The next piece that I would say that can be considered if you are looking at federal taxes for the current year, you're anticipating federal taxes, don't overlook the pass-through entity tax. What this is something that came into play a couple of years ago. Paying the state tax, depending on what state you're in, you're more than likely eligible. Paying your state tax via your LLC or S corp. So if you're in a pass-through entity that qualifies, that has its own tax return, for instance, you can go ahead and pay that state tax ahead of time. You can pay it before December 31. And the advantage here is that it's paying on the individual's behalf, but you get to take a federal deduction for it on your farm. So there is a piece there, very beneficial to farmers over time. The last piece that I would I would definitely be considering as a farmer, in particular a landowner, is, and this is a really hot topic lately, is excess nutrients in property that you've recently purchased. So if you've purchased property in the last 10 months in 2025, don't be afraid to go talk with your agronomist, get a soil sampling done, and understand that if you've paid a premium for that property, how much of that premium can you allocate towards fertilizer? This is becoming more and more of a hot topic lately. There is a little bit of a gray area here in terms of maybe what should be allowed and when what is getting too aggressive. Talk with your CPA, talk with your agronomist, explore what the right answer is for you. Now, one piece that is not debatable is don't forget about the other capitalized assets that could be on your farm. If you purchase land, don't forget to capitalize and depreciate any structures on your farm, any fencing, cattle guards, terracing. You can absolutely put values and dollars towards dirt work, terracing, waterways, erosion control structures, irrigation, wells, and if you're sitting on an aquifer, don't forget the water depletion. These are all things that you should be discussing with your CPA. If they're not asking, make sure that you're telling them.
Keaton, I have one clarifying question on the information you just gave us. When you were talking about buying inputs, can you give us more details on what you meant by buying inputs now versus after the first of the year?
So when I say that, I wouldn't necessarily suggest that they're prepaying their inputs. If you're already at a loss and there's not a discount on the table, I would say that you're better off holding that cash for the farm. Yeah.
Gotcha. Okay, gotcha. Thank you. Thanks for clarifying that.
Mhm. Absolutely.
Okay. What are some good tools, would you say, for farmers to use to be able to track their expenses, to be able to keep up with everything that's going on as they're moving through the year?
Right. So I do think that that's really important when it comes to the tax planning season is having an organized, accurate set of books. So if you're not working with a bookkeeper, keep good records, keep good records. And I think that that means in my mind, not necessarily keeping every single paper receipt, but making sure that your bank statements are reconciled. Go in, add good descriptions to things, make sure that they're properly classified. So when it does get to your CPA and your tax return, there is no doubt in their mind of what they're preparing, what pieces are what, where they go on the return. So good records, that's really important. I would say also alongside of that, be timely. Being timely is very important, especially at tax planning season. There can be maybe a lag, right, or difficulty for your CPA to understand when those books were keyed, when the cutoff was. Understand the transactions that have occurred on your farm, income or expenses after that date, so you can communicate that with your CPA. And I would encourage you to have a relationship with your CPA. Make sure you're comfortable communicating everything with them, help them understand your goals. Same thing with your banker. They need to be able to understand what you're showing on your Schedule F because all the things that we just mentioned, it's very easy to move the needle up and it's very easy to move the needle down. So helping your banker understand where your farm is on a reality basis, not just a cash basis, because your Schedule F in most cases is on a cash basis. So helping your banker understand that you have prepaid several expenses, or maybe you have taken a large amount of bonus depreciation because you took bonus depreciation on a new tractor that you purchased for the year, for instance. So all those things are important, and they do come back to keeping good records.
And I think you're alluding to this as you're talking. Any other common mistakes or any other helpful hints of things that you've seen over the years on what farmers can do to help simplify and not only on your end but their end?
Absolutely. I'd say to simplify things, have it in a software, right? Don't just bring bank statements in. If you can, have the software ready and know your own numbers, right? I can't tell you how often I've worked with prospects and they say, well, this doesn't make any sense, right? What my CPA, my current CPA gave me. Like, well, did they do the books for you? Yes. Did you review them? And a lot of the times the answer is no, right? And it might be a timing issue. Maybe it included deferred crop insurance from last year. Maybe they've pulled in some deferred grain contracts from the prior year. And so some of that is going to be on the producer to understand where their farm is financially. Not that they're at that alone. They absolutely are not. Just be willing to ask questions to your CPA.
Keaton, thank you so much for lending your expertise here today. Keaton Dugan, he is a senior manager with Pinion Global. For more information, log on to pinionglobal.com.
Thanks for tuning in to this edition of the Ag Queen Podcast with your host, Lori Boyer.